time to join. Good morning, everybody, and thank you so much for making out time out of your busy schedule to join us this morning to discuss critical issues that affect the growth and the movement of Nigeria capital market activities, particularly around the critical topic called virtual assets. So with me this morning, I have a very, very, very well enlightened panel that will be sharing their perspectives and helping us understand what are the key things to look out for. So we do have on the call this morning the MD, CEO of the NASD as well, Mr. Bola Ajumale. We also have the MD, the COO of the NASD, Mr. Egwade Lunge on the call. We also do have on the call Mr. Andrew Simpson, who's a market expert. Who will be speaking to us on the perspective on how things have worked in other markets. And we also are expecting the commissioner from the SEC to join us on the call as well, so that we can have a well-rounded panel by the name of Mr. Dayo Obison, who's also on the panel to take us through where things are from, where things have moved from the last time the rule books has been issued, how much progress we've been able to make till date, and also sharing his perspective on why he thinks the SEC has gone this route to issue guidelines to support the growth of this market. So we're going to drive straight right in because we know it's going to be a packed up session. So I'm going to invite the MD NASD to please give us his opening thoughts on what to expect, and then we can set the ball rolling and get into the panel session right away. So permit me to introduce Mr. Ajumale, who will be taking his opening remarks. Thank you.
Good morning, everyone, and thank you, Damola, and thank you, everyone, for joining us this morning. We've been on this journey for about 2 years, and in the last couple of months, we've ramped up putting together a digital platform in partnership with TK Tech and with BlockStation in Canada. We also have been working very closely with the SEC on making sure that the framework and the structure is in place. We then realized that because it is, and in the process, in the time that we were doing this, quite a few other markets started opening up their digital platforms all over the world. In the process of doing it, we realized that there's an absolute need for us to build our knowledge base. It's a new industry, it's a new asset class. And because we realized the need to build a very robust body of knowledge, we decided to open up what we call an Enlightenment series. I believe we will have up to 10 of these, and it'll be a continuous thing as well. In the first session, we had an excellent time with Mr. Keith Baer. He was from the George School in Cambridge, and he took us through essentially the structure, the framework, and some of the possibilities of the digital asset class. Today, I'm very pleased in this second session to introduce you to Mr. Andrew Simpson, who also has over 20 years experience in capital market strategy, in exchanges as well as in banks, mainly in the UK. However, he is now the advisor to the group CEO of the Spanish exchange. He has had experience in clearing, he has had experience in Euronext, in validation services, and in market structure as well. So he will be taking us through essentially his own perspective on what this digital asset class means for essentially issuers, regulators, as well as investors, and even other operators in the market. We then also realized that because the SEC has released its first set of rules, it would be necessary for us to have a very clear picture of what these rules imply for us, and whether there are any kind of refinings that we want to put into those rules for it to become, well, if we all recall, the draft of the rules came out on one particular day, and we had maybe like a 1-week window within which we responded, and the SEC came up with the first set of rules. We believe that obviously as the market progresses and starts off, we will have to refine, or it would be a good idea for us to refine those rules. I therefore have, I'm really delighted to welcome Mr. Joseph Emuije Jeze from the firm of UUBO, who will be speaking to us at some point on on his perspective of those rules. So we have a legal perspective and an operator perspective. And please feel free to send any questions. We are obviously very honored to have the SEC in the room as well. I did receive a message from Mr. Obiso that he's away on call on national duties. And so we have Miss Janet Ekaite, who is the head of FinTech and Innovation, who will be representing Mr. Obiso today. So I wish everyone a great session. If you do have any questions, please put them in the question and answers in the question segment. I'm sure they will all be treated. Any questions that cannot be treated in the time that we have, and we don't want to take too much of the time, so this will be a very short session and a very sharp session as well. Anything that we cannot answer, we will send it out. We'll get answers to, and then send the answers out in a curated form. So please enjoy your session, and please ask us as many questions as you can. And obviously, we learn more and we get more from interacting. So we hope this will be a great interactive session. So I will hand over to Mr. Andrew Simpson to please take over and take us through his own thoughts on this new asset class on market. So over to you, Andrew.
Thank you, Bola. And well, thank you to the NASD and Damola as well. And thank you to everybody for listening today. I have to say, as Bola mentioned, you know, I have somewhere, say over 20 years of market structure, working in the city, working in Europe, working in the US. And so I come at digital assets with a view of a broad view, should we say, of market structure and the use of any asset class for capital markets, for raising finance, for ensuring stability. And this today, I have to say, it's a fantastic opportunity to do one thing that I will touch on regularly through my next 20 minutes, which is about collaboration. We're using Zoom, we're using technology, we're using digital, and what you'll find is that too many people fall down towards crypto straight away. And so what I want to try and do through this 20 minutes is try and cover the fact that actually it did start with crypto, but ultimately we're talking about something which is far broader than just cryptocurrency. I started working with distributed ledger technology in 2014. Actually, I attended a Bitcoin session in London, and Bitcoin was trading probably somewhere near $20 or something crazy. There was a lady there who was being paid to take pictures in Bitcoin. Who knows whether she's now living in a sort of super Manhattan flat or not, but you know, maybe we'll find that actually because of the risks of cryptocurrency, she probably sold out far too early. But this is one of the points actually. I started looking at Bitcoin and then realized that actually there's a great technology, which is, as we know, blockchain that sits behind it. And at Euronext, where, as Bola mentioned, I was the head of post-trade, I started looking at the use cases for that and sponsored a competition internally to look at distributed ledger technology use cases. Most of these, when we started, were really looking at internal options for the use of it, efficiency, security, the non-repudiation benefits. And it wasn't really until I met with some of the wheat commodities trading guys at the Bourse de Commerce in the center of Paris that I realized that there was a real opportunity to look at something far deeper. And the first real digitization concept that I was involved in related to wheat financing. I started to develop and actually designed an electronic wheat certificate that represented the ownership of the physical product. It essentially enabled collateralization of commodity derivatives products. And I have to say, and it sounds weird to say it right now, in a sense, that we eventually designed it without DLT. And why? Well, in all honesty, we realized that it was far too complex for the regulatory bodies and the regulatory environment that we had at the time. The whole thing would require a change in law, but it certainly paved the way for innovation and raised many questions, huge numbers of questions, as we started to develop this concept. How do you regulate electronic representations of an asset? Who can raise and register or even issue them? How can you store them? Where do you store them? What sort of custody arrangements do you require? And how do you change beneficial ownership? And fundamentally, we started to wrestle with the problem, can you trade them? Is there a secondary market that you could use, or even go as far as to say you could securitize them? Is that actually possible? And so it led me to be involved in quite a few initiatives, actually. And significantly, I realized that we have to have a clear and unambiguous distinguishing mark between what you'd call crypto, what you'd call the technology of distributed ledgers or blockchain, of tokenization, of digital currencies like CBDC. And there needs to be a clear separation and an understanding of what the use of those are and how they should be used. So, hey, and at this stage, I'll tell you what, I'm not going to even get into NFTs and the metaverse, which is something I'm looking at the moment and helping someone with. So, you know, those really do start to create some complications. Look, my aim today is to cover some of those themes and, of course, cover the regulatory discourse that's happened perhaps over the last 5 to 6 years and really cover some of the challenges in global understanding. We have a large number of regulatory bodies across the globe, and they've all been dealing with digital, with fintech, tokenization, crypto in relatively different ways. And I could loop in there actually artificial intelligence. They're all being dealt with slightly differently, or had been, but things do seem to be changing, I have to say. In the time that I've been involved in this, I've definitely seen a shift, and I could go around the globe, but actually I think for today's discussion in 20 minutes, of course, I'm just going to cover lightly the UK, France, the European Commission, the US, and very importantly, Switzerland, because this last one covers off something which I'm not being super close to, not central with, but I've dealt with the Swiss exchange in my career quite extensively. I worked for Jost Düsseldorf, who's the group CEO of the Swiss Stock Exchange. I worked for Urs Rusiger before that. And actually I was part of the team and the genesis of the merger between the Swiss Stock Exchange and the Bolsa Mercados Español, the Spanish Stock Exchange. So I have some close affiliations in many respects with the SDX, but I have to say I didn't get involved in the design or the build of it. So I'll put that caveat there. I think much of the challenge for regulators has been picking through the priorities. I mean, let's be clear, crypto or tokens or an overall digital technology, but they have other priorities, such as in the EU, say a harmonized rule book that the European Commission has been trying to handle. And of course, you probably all know, Brexit, that's been a big ticket item for the UK to deal with. And therefore, in many respects, the digital assets, the structures around tokenization have not really been the priority. Anyway, let's first look at the US, because I think it's quite a salient example. It's not been very coordinated, let's say. It's been evolving very much so. There are 4, and possibly you could say there are 5, if you include the White House, bodies that have been focusing on the way that digital should be looked after. The CFTC considers Bitcoin as a commodity. The SEC, under the new chair, Gary Gensler, sees cryptos as securities. The Treasury considers them as currency, and the IRS wants investors to disclose the crypto activities on their tax returns. The White House recently issued an executive order basically directing all the agencies to coordinate. Now, that just shows that there's a real difference across the US, but almost in the last few months and in the last year, really, there have been some 50 bills either put in place or are still being considered. And they cover, I grouped them loosely, probably in about 5 areas. They cover crypto taxation, they cover central bank digital currency, CBDC. They cover the rather mouthful of regulatory treatment of digital assets and digital asset securities. They cover the supporting distributed ledger technology or blockchain. And then finally, perhaps not unusually for certainly the US, and this is something which we're seeing more around the world, they cover sanctions and ransomware, specific issues such as China and Russia that are also being looked at. So we can see that the US has started to coalesce around laws and regulations that are important. And within that regulatory treatment of digital assets, I picked out 3 that I thought were interesting. I'm not going to go into the detail, but it shows you the themes and the direction of intent. One of them is the Blockchain Regulatory Certainty Act. So, you know, are you what you say you are? Does the transaction mean what it's going to do? The Token Taxonomy Act, which aims to provide clear guidance on the way that tokens are used, and the Digital Asset Market Structure and Investor Protection Act. And I'll come back to those sorts of things in a minute, because it's really important when we start talking about digital that we remember investor protection. And that is the role, as Bola and I were talking about, where brokers have to come in, because the intermediation that exists between an exchange, a venue, and infrastructure, and the end consumer always has to be there. There is simply no way, really, that an exchange is set up or an infrastructure is set up to deal with consumer demands. It's just not a place to handle retail. It's just not set up for those sorts of interactions. And I could go on with the acts, but the most important points really here are that, one, the White House wants really everybody to come together and coordinate that collaboration again. And the themes of there's a clear distinction between crypto and the overall digital assets and the market structure. And that's a really important distinction, that mature economies, our economies that we're collaborating and talking about today, are increasingly separating crypto from the digitization of an asset. So we can see that everything is evolving right now. Now, let's quickly cover France. France and the European Commission. So France largely falls under the European Commission, of course, the European Parliament and the Council of Europe. Of course, it falls under, to a degree, the ECB as well, the European Central Bank, although rather I'd probably more accurately say the Banque de France falls under the ECB. And so what you'll see in France is there's a government, which is the Trésor in the case of electronic assets, the AMF, the markets regulator, and the ACPR, the prudential regulator. Now, they've all been working together with the Commission, but actually, if you go back in history, what France did was actually wasn't really led by the EC initially, the European Commission initially. Basically, what they did was developed a largely cryptocurrency-based trading concept, which fell under anti-money laundering and KYC rules, which all they did was simplify and in many respects made them slightly stricter. And they really covered initially combating terrorist financing. So much of that was done initially because at a rush, they realized there was potentially a problem, and the FATFA, the Financial Action Task Force principles needed to apply. So in terms of digital assets, it's not really until the European Commission started to get involved across Europe that we saw that coalescing and that collaboration again. And now what we see is the European Commission working on a Digital Markets Act, which, even though the UK is divorced from the European context, the landscape of the European Commission, it has a number of parallels with what the UK is doing. And that, again, is very, very important.
Okay, Andrew, I'm going to have to stop you there so that I can quickly get the other panelists to give their perspectives. We're still going to come back to you. You have a lot to cover. and we understand that we have a bit of time constraints. So I'm going to actually want to get the legal perspective from Mr. Ubo, who is also on the call. And then we're going to take a quick perspective from the SEC on where things are. And then we're going to come back to some of the questions we have lined up for you. And then you can run us through some of the other thoughts that you have about the markets. So do we have Mr. Ubo on the call, please? Okay, I guess we'll have to move to the
Mr.
Yes,
Joseph. Yes.
sorry, because I was a bit taken aback initially when you said Mr. Ubo.
Sorry, Mr. Joseph. Apologies, sir.
Yeah.
Sorry
Because
about
that.
yeah, that's the acronym for the law firm where I'm a partner. Good morning, everyone, and thank you for joining this session. My part is to talk about where we were, where we are, and where we hope to be. Where we were prior to May this year was that there were issues around whether cryptocurrencies, virtual asset or digital asset will be regulated in Nigeria, and the role of the various regulators in that setup. The initial point was there was no communication from any regulator in relation to digital assets. At a point, the central bank stepped in and stopped banks from and required banks to carry out high-level due diligence on dealers in crypto assets and their customers. And then it then followed, the central bank then followed with another regulation that prohibits banks from settling transactions that has to do with digital assets. And then this SEC followed that with a statement indicated interest that it was going to regulate crypto dealings in cryptos in Nigeria. And then it backed that up with issuing a draft regulation. The draft regulations were eventually issued sometime early last month. Now, what do the regulations seek to address? The regulations are broken into 5 parts. You have the first part that deal with offering of digital assets. Then you have the second part that deal with the regulation and registration of digital assets offering platforms. Then you have a part that deal with digital asset custodian, then followed by the virtual asset service provider, and then you then have the last part that deals with regulation of digital asset exchange. Briefly, what does SEC seek to achieve in relation to digital assets offering? The first thing it seeks to do is that all digital asset offering that we offer in Nigeria or that are targeted at Nigerians would have to be registered with the SEC before they are offered to the public. And what are the process of regulation? Those are set out in the rules. And then the key point to note is that the SEC requires prospective issuers of digital assets to provide to aid a document, what you call the white paper, detailing issues in relation to that platform, and also accompanying with the legal opinion that justifies why the digital asset will be classified as securities for the purpose of the registration. So the various processes of that we have to go through in relation to for SEC to confirm that those are really digital assets that require registration will have to be complied with. Now, the SEC requires an issuer to prescribe a minimum issuance of 200 million and a maximum issuance of 20% of the 20% of shareholders for 20 times the shareholder funds of an issuer, or what they call a hard cap of 10 billion. And then SEC also requires that an issuer of digital assets would have to ensure that the directors and key personnel of that institution hold a certain percentage of the offering. Now, the question that will arise there, it's the key thing that SEC need to address there, it's the purpose, the key issue that has to do with who can issue, how the classification of, how the hard cap of the hard cap of 10 billion would help institutions such as listed entities who may want to issue digital asset, or i.e. tokens that are linked to debt or equity instrument, because the 10 billion cap is really small compared to what the institution that may seek to issue tokens that are represented by shares or debt instruments. Then the next thing to also consider is digital offering platforms are also required to be registered with SEC. So in this case, you have a platform where digital assets are to be offered. The first thing I should mention here is that the SEC try to create a distinction between virtual assets and digital assets. Virtual assets in the SEC regulation are assets that are virtual asset that is a representation of value which you can transfer, you can exchange in various other forms. And then describe digital asset as a separate class of assets that have to do with asset that are representation in form of tokens of linked to equity or debt. And then in definition of digital asset, it excludes virtual assets that are linked to fiat currency. So in that case, the central bank in Naira will not be regulated. Then the question that will arise in that definition is stable coins, which are linked to fiat currency, are they required to be registered with the SEC if they are be offered in Nigeria or offered targeted to persons in Nigeria? That part of the rule is not clear as to what happened in that regard. And also the one other key thing to note is that the SEC requires that a digital assets platform need to have a minimum share capital, a minimum capital of 500 million. And that capital is not only in relation to shares, could be equity, could be in form of investment in fixed asset, it could be in form of cash in the bank. Then the next part of the rule, which is also critical, is that in relation to digital assets custodian. These are institutions that which SEC seek to regulate that are act as quote unquote safekeepers of virtual assets or digital assets. And this entity will need to be registered with the SEC. The SEC requires that if you have an existing institution that provide custodial services in relation to debts or equity instruments, and that entity now also seeks to provide custodial services in relation to digital asset or virtual asset, that notwithstanding that other entity already registered with the SEC, that entity will also need to register with the SEC second time as a digital asset custodian. And then require that if you have a foreign institution that provide digital asset services, that institution and it seeks to target Nigerians, that's you need to register with the SEC. Part of the requirement is that that institution needs to show SEC that it is registered in its place or in jurisdiction of incorporation, and also that the SEC has what we call a collaborative arrangement between the SEC and the relevant security regulators in that particular jurisdiction. Now, I go back to DOAP, which is the platform. One key thing to note in relation to the platform is that the SEC requires every platform that stands to serve as offering platform for digital asset in Nigeria must need to be incorporated in Nigeria. So it doesn't matter that the institution is already registered elsewhere. There's no provision in the regulation that permits a foreign platform to just register with the SEC without incorporating here in Nigeria. So that institution has to first incorporate.
Okay. Thank you so much, Mr. Joseph. We know we have a lot to cover. So you've already given us a lot of food for thoughts already. I'm sure the representative of the Honorable Commissioner would also address some of the concerns you have mentioned, but we're still going to come back to you. I would like to give the permission to the representative of the Commissioner for Market Operations from the SEC, represented ably by Ms. Janet, to please give opening remarks. And she also has the opportunity to speak to some of the issues that you have raised so that we can now begin to take the sessions and the questions that we already have populated for this particular engagement. May I call on Ms. Janet, please?
Okay, good morning, everyone. Thank you for the opportunity. I'm representing Mr. Dayo Obisan, the Executive Commissioner of Operations. And well, Mr. Joseph has said everything, so I'll just go through the SEC regulation and digital assets. So we know that globally, that a lot has been done in terms of for innovation in the financial markets. A lot of regulation has been responses to regulation has been communicated, and then regulation of fintech has moved away from principle based. It is now more on the focus applications on the new rules and guidances guidances on specific fintech related activities. Regulations are being crafted on specific fintech related activities. So the Commission has not sat back. We've also done a lot to respond to fintech challenges in the market. We have started some initiatives such as fintech. We engaged the community, the market to sorry, excuse me. Okay, we've engaged the markets, and then we collaborated with the FinTech Roadmap Committee to come up with a framework for the regulation of fintech. And with that committee, we're able to come up with the Fintech and Innovation Office, which engages directly with the fintech community to guide them around SEC regulation. We articulated the Fintech and Innovation objective. The Commission has an objective for fintech regulation, which basically focuses on safety of innovation, market deepening, and also focuses on providing problems to existing regulatory challenges, such as solutions that will enhance supervision or compliance of the rules and regulations in the market. So with regards to the digital asset regulation, SEC released the regulation which is basically on the issuance of digital assets offering. And then it's anonymous, it sort of falls under the virtual asset service providers as anonymous umbrella. But under it, we have the regulations for digital asset exchange. We have the regulation for digital asset custodian, and then we have the issuance of digital asset platform. So those regulations have their different requirements, which the rule has broken down. So in summary of the rules on issuance, offering, and custodies of digital assets, the rules on VASP aims at to accommodate activities of virtual, that is crypto asset service providers that have manifested in several forms in the capital markets. The emphasis being on the activities that comprises investment businesses within the SEC sphere using virtual assets as the product, and including ancillary services. So the focus on the VASP rule, we have tried in the rule to recognize the unique feature of virtual assets, which are tokens that are created by code and have no physical manifestation. We also made provision for the non-unique asset-backed token, that is the digital asset, which is known to us as in a digital representation of value that can be transferred, digitally traded, and can be used for payment or investment purposes. So the emphasis on the digital asset-backed token is the issuance, because the assets composition is already known to us. The issuance on the blockchain or other DLT application is unknown, and that is why we have made the provision for the digital asset token regulation. So virtual asset service, so the general rules of the rules, they are broken into parts. So the general part of the rule sets out the general requirements for VASP, which contains the applicability and then definition. So the rules on digital asset exchange don't forget the platform, the main platform or infrastructure is digital ledger technology. So where virtual assets are traded, and any assets which is a crypto base are traded on it, including asset backed. So both digital assets and virtual assets are traded on this platform. So the focus is the virtual asset providers. The platform trades both digital assets and virtual assets. And then for us, the virtual assets are basically the cryptos, the cryptocurrencies. And then the digital assets for us is the asset, the tokenized asset-backed securities. So therefore, digital assets that are represented as tokens on a DLT blockchain, but are asset-backed are also traded on this infrastructure. So the rules comprise, as I've said earlier, applicability, requirements for registration, board obligation, etc. And then rules on digital asset offering. These sets of requirements are for issuance of virtual assets, both virtual assets and digital asset backs. That is the ICOs, and then the tokenized assets. So the rules comprise applicability, and then specifically for the issuances are the initial assessment, which includes the white paper that will be submitting, and then there's limits of fund, as Mr. Joseph has mentioned a few of those requirements. And then for the digital asset offering platform, the DLT-based structure that enables the issuance of blockchain-based tokens. This rule comprises of specifically conflicts of interest of management, operation of trust account, custody of virtual assets, digital assets outsourcing, and investment limits. So the rules on regulation of digital asset custodian, this sets out requirements that specifically speaks to obligation, the digital asset custodian obligation, risk management, outsourcing, and cessation of business. So for us, we have tried to define the virtual asset service provider as an entity who conducts or who is involved in exchange between virtual assets and fiat currency, who exchanges between one or more form of virtual assets, or who is involved in transfer of virtual assets, safekeeping, administration, and then participation in and provision of financial services related offer. Well, for us, the virtual asset I've said earlier, or Mr. Joseph has said, is a representation, digital representation of value that can be transferred, digitally traded, or can be used for payments or investment purposes. It is not included as a digital representation of fiat currency. It's different from the fiat currency or our known securities or other financial assets, while the digital assets is digital token that represent assets such as debts or equity claim on the issuer. So what the Commission has done, we've been engaging with the relevant stakeholders. We are currently operationalizing the rules. Application is about to commence. We have not received application yet, and we're also engaging with other regulators, sister regulators, on the operationalization of these rules. And then we're looking forward to see that there's increase in retail investor base through user-friendly investment. That is what we expect from the operationalization of this rule, what fintech will come up with. And then we also expect to see increased introduction of new front-facing application by incumbents and to improve client experiences. We also expect to do collaboration between incumbents and technology vendors. In fact, we expect to see fintech collaborate more with the incumbents in the market, because the existing players in the market understand the system. So if fintechs come together with already existing, the traditional players, I think they will be able to understand the financial market regulatory perimeter better. And then we encourage, or we expect to see increase in reporting requirements, and of course, transformation of the whole capital market system. So I'll just stop there for now.
Wow, thank you so much, Ms. Janet. Quite very insightful. I think some of the points you've highlighted has addressed some of the questions earlier asked by Mr. Joseph, which speaks to some of the elements around. So it's safe to say stable coins will fall clearly under virtual assets, and therefore they can definitely be traded on an exchange like any other currency. But we're going to come back to that. Let me run straight back to Andrew, because Andrew, we have a lot to cover on your end. This is because your markets have advanced clearly in this space. So let's start with your thoughts on how much participation do you think or support do you think Apex regulators should offer exchanges? Particularly, this question is more of a fine line, where existing exchanges, are they really required to get new licenses, or they can just add existing components of digital assets as one of the trading factors? Because the rules actually here do not clearly define if they should go for a new license or they can have a waiver with existing licenses. So what are your thoughts on that? I'd like to share your perspectives from that point.
Yeah, I think, Damola, that the most important thing is that, and I worked at the regulator. You know, I was at the FSA and now what's called the Financial Conduct Authority. And I really compliment and mirror what Janet was just saying, that we create rules. It was a principles-based environment. We now create rules. But I'd also look at the Swiss environment, where, you know, that they were one of the more advanced and more friendly towards digital assets, should we say. And one of the comments that FINMA states in its annual report is they want to create a scope for innovative new businesses. And they've really done that and proven it by the way that they've provided the registration, the licenses for SDX. You know, ultimately, what they did with the DLT Act is that they basically saw SDX as an FMI. Remember where FMI comes from? It comes from the IOSCO principles of 2012, where they defined very clearly the key critical financial market infrastructures that helped us get through the 2008 financial crisis. And so what the FINMA guys have done is they've basically given out 2 approvals, one to SDX Digital Exchange as a CSD, and one to SDX Trading to act as the stock exchange. No, there's no CCP there. They don't see the need in that particular cash-like asset for a clearinghouse. But to answer your question with that as an example, what the regulator is doing is facilitating innovation, working with the market, working with new initiatives, but not forgetting history and the reason why we had the problems of 2008 and the reasons why we got through the problems of 2008 with those infrastructures. We must never, ever forget that whilst the regulator may want to facilitate innovation, they also must promote investor protection, fair and transparent markets, competition, that's absolutely important, and to a great degree, they are absolutely responsible, whether it's through a prudential regulator or a markets regulator, depending on the setup, or a central bank. They are absolutely there to ensure that risk is managed. And that's their job. And we can only do that if we work together on those new initiatives and help each other understand how those new initiatives work, rather than participants trying to get around the rules or trying to bend the rules and do something nefarious. I mean, we're in such a new landscape. We've just got to keep that 2008, 2012 IOSCO standards in mind whenever we think about the way that market structure works.
So you think the licensing could be done in 2 parts, which is that the SEC still needs to grant existing exchanges consideration to trade digital assets, which means either in form of a waiver or in form of a license, some licensing is required, so that they just don't jump from one license requirement to another license requirements. Is that what I hear from you, Andrew?
Yeah, exactly. I mean, ultimately what we're talking about is it's an asset class, and each time an exchange wants to launch an asset class, of course they've got to get approval. An equities exchange cannot simply start trading derivatives. That cannot, you've got to go through the approval processes.
Yes.
See, but and even when at Euronext I adopted new technology, I had to go back to the regulator, to the AMF and the ACPR, to explain what that new technology was doing, whether it was a brand new shift of databases, whether it was a shift of migration to a new data center. The technology is important. It's important enough for the regulator to want to know that you're doing the migration properly and safely.
Exactly. Excellent. Now, before I let you go and move to Mr. Joseph, I just want to check with you. How does the requirement of SEC and regulators around the world, when they require the registration of all new issuances, how does that really impact on cross-border listings? So, for example, gone are the days where you have dual listings in Johannesburg and Lagos and in London. So how does this requirement affect cross-border opportunities that can come in where you have external parties wanting to list in an exchange because of more favorable jurisdiction?
Yeah, I think that's a fantastic question. I think we've got a lot of what we call wood to chop on that one, because, in all honesty, Damola, I don't think anybody's answered the question. All I can tell you is that there's a lot of thought on the way that that cross-border listings will take place. Just 2 seconds, there's some noise in the background here. Sorry, someone's shouting at their phone. Yeah, I mean, I think we'll see that it takes place more easily initially in an environment like Europe and the European Commission. We'll start to look at this seriously. But in all honesty, I think that we have probably another good 6 months to 8 months to go before we see any real challenge or to the existing landscape. Don't forget that most of the major entities like the US, the UK, Europe, Asia, Africa are all still putting together their main body of regulation, and that really hasn't necessarily covered how you do the transfer of assets across borders, how you do dual listings, or how you do branches of banks and so on. So I think there's still more work to be done.
All right, thank you so much, Andrew. So I'm still going to come back to you because we still have a lot to talk about in terms of atomic settlements and CBDCs being issued and so on and so forth, and your experience with SDX. By the way, for our audience, SDX is one of the only live trading platforms in the world that runs digital assets or trades digital assets as we speak. So they are ahead of the curve, and I'm sure Nigeria, with the NASD at the forefront of this, will definitely be taking that position as well. So let me move straight down to Mr. Joseph, who's our legal expert in the room here. So, tokens are nowhere listed in the law book, in the law or in the ISA Act or in the rule books issued by SEC. So in what way can we consider tokens? Are there any laws in place? Are they adequate enough? Are they comprehensive enough to allow for legal interpretation? And what are the loopholes? Because I don't see anywhere in the ISA where you mentioned tokens, and I don't see anywhere. So how can this be a conflict?
You're right. There is no express mention of tokens in the ISA or in any other law as they currently exist. But if you look at the definition of securities in the ISA, it's not an exhaustive list. So I think there is a possibility to make an argument and say this SEC could, as it has done, classify tokens as securities. That will be on an ad hoc basis. But if the law it's amended, hopefully in the future, there would need to be an express inclusion or exclusion, as the case may be, of tokens as part of securities, depending on how the lawmaker would view tokens at that material time. But currently, I think what the SEC has done, I think we can make a case for it under the definition of securities in the ISA, unless a court rules otherwise.
Okay, excellent, sir. And from your point of view, so what I hear is that there needs to be some amendments to the ISA Act as well to further expand the reach of the market. I mean, what are the legal interpretations that you see in this space and any loopholes? I mean, what SEC has done now allows for us to at least get the market started. But what other areas do you think require some coverage that we need to quickly brush up on so that we can have a very active market?
Yeah, the big elephant in the room, which I keep using that expression when I have cause to talk about this, has to do with the central bank. Currently, the SEC has done something good, which is a step in the right direction, and then which we hopefully will be built on. But the bet is the central bank currently has done two things: prohibit the institutions including banks regulated by it, from dealing in virtual assets. And secondly, it prohibits the banks and other institutions, including payment service providers, from facilitating settlement of transactions in virtual assets. Now, we should note that SEC has done a good thing by making a distinction between virtual asset and digital asset. But the central bank prohibition doesn't distinguish between either of the two. So notwithstanding that SEC has done something noble, which we believe is in the right direction, unless the central bank relaxes this prohibition, it's going to be difficult for the institutions that SEC is seeking to regulate to operate in the Nigerian market, because they cannot simply operate a bank account. An instance would be, you have NASD here. Assuming NASD tomorrow sets up a digital asset offering platform, and then you need banks to facilitate transactions on that platform. And NASD will need to have a bank account. But today, it cannot do that if that bank account is linked to settlement of transactions in virtual asset, because of the central bank prohibition. So it will be good to hear from the SEC to know whether SEC is engaging with the central bank to see what can be done to ensure that this prohibition is if not completely removed, it's relaxed in a way where banks are probably permitted to deal in relation to digital assets, which are linked to a real asset, and then separate virtual assets from digital assets. So that would be the starting point. And then we can then move forward as to whether the central bank would then allow banks to allow settlement in transactions to do virtual assets. So which is key, that has not been addressed and it needs to be addressed.
Thank you very much, Mr. Joseph. I mean, the CBN has also made some good moves in terms of making the e-Naira available. I think we now need to see the connecting points between how CBDCs can enhance the trade of digital assets and virtual assets and so on and back and forth. So I'll move straight right to Ms. Janet, who's been very enlightening, sharing with us her thoughts and why they have come this far in terms of providing the rules. So I think two questions I'd like to take on with Ms. Janet. The first has to do with your earlier comments that you mentioned around the guidelines and your thoughts on them between exchanges and getting consideration, like Andrew had mentioned, for adding new asset classes. Is there a clear line of sight on how that process would work with the SEC? That's one. Excuse me. And secondly, Mr. Joseph mentioned the issue of the hard cap of 10 billion, considering the size of the market and size of the opportunity that we're involved in. So what are SEC's thoughts on that hard cap, and if there's room for us to move that hard cap forward? And then the last part of this has to do with some exchange from the audience, which is pretty much trying to understand the difference between a digital platform and a digital asset exchange. So I'd just like you to see how you can help us combine all those questions and give us your thoughts on them.
Okay, thank you very much. I'll start with the last one, the differences between digital asset exchange and virtual asset exchange. They're all virtual assets service platform. They're all platforms. And then they trade, that the platform trades both digital assets and virtual assets. But however, for securities, for asset-backed tokens that we regard as securities, those are the ones that will be issued on the digital assets offering platform. The digital exchange, the digital asset exchange is a trading platform that trades already issued securities. So I think that's the main difference. The digital asset exchange trades the securities, while the offering platform is for the issuance of digital asset backed tokens. And then the second question, sorry, can you retake that again?
Yeah, so the second question, but before I move to the second question,
cap,
so
the 10 million cap.
Both of them become hard cap, yes.
Yes, the hard cap. We are engaged, we're going to provide guidance on that we're still looking at it. We've received a lot of inquiries and comments, and then we're looking at the merits of it, because it was put there for it was put there, as you know, we have one of our core mandates is investor protection. So it was only saying that the promoters of this platform should own, majority should own have an impact in the whole structure. So, but conversations are ongoing. We're looking at it, and guidance will be provided soon on it. That's what I'll say on that for now.
Thank you very much. But just back to your earlier answer, is it possible for a platform to offer both the issuance and the trading? And would they require the same license?
The way the platform is built, it's built for both. The blockchain DLT infrastructure does both. So okay. It's this, it's the same. It's the underlying technology is blockchain.
Yes.
And it's used for both issuance and trading. But SEC looks at the activities. We had to separate the activity from, there are two different activities that needs to be regulated.
Okay, but it's possible for one platform because they run on the same underlying technology, so one platform can actually do both. Okay, thank you for that clarity.
And it's also possible to issue on one and then list it on our existing infrastructure for trading. So it depends on how the promoters intend to carry out their operation.
Okay, thank you.
That's after issuances. Yes.
Okay, thank you so much, Ms. Janet, for putting perspective on that. So I'll just run straight to Mr. Ajomale, and I need to run quickly to Andrew because of time. But let me start with Mr. Ajomale quickly. So what has NASD done in this direction in view of all those factors that you've heard so far? How does this engage, how has the community been engaged in terms of issuers, brokers, the entire ecosystem? What is NASD doing, and how ready are we to say, get the word going today? Let's move forward. What has NASD done in this regard? And can you bring us up to speed on what's likely to happen over the next 3 months?
Okay, so we started off with studying the system, even doing a check on the demand for this kind of market, and whether the market is ripe enough for it. And we concluded very quickly that indeed it was. There's some areas, some industries that we identified as being particularly in need. And we had actually worked with SEC over a period of time, maybe a 2-year period of time, where we'd been looking at a particular asset class or a particular type of asset that probably would benefit from being converted into a digital asset. In the process of our discussions, we then worked with Chiketech and BlockStation, and they're a blockchain company in Canada. We worked with them to design a pilot run, got a custodian and some pilot brokers together, or some sample brokerage firms together. And we actually did do a pilot run, tested it quite well over last year. And by the time we concluded, we drew up rules that we submitted to the SEC and made an application to open a digital platform. And then, of course, by the time the draft rules came out, they aligned quite closely to what NASD is planning to do. So I would say well, we've seen the first set of rules. Clearly, as Ms. Janet said, there's still some discussions around the market-wide, on some things that we think might benefit from being fine-tuned. By the time those are all done and essentially the bell is rang, NASD can actually open up with 1 or 2 issuers. I think we have 1 or 2 issuers who are just waiting for the market to be fully distilled, for us to get the CBN nod as well, or the workaround, the CBN nod. And there are workarounds around it, but then again, we'd rather not work around, we'd rather work within a harmonized market. And so NASD, I think, is pretty much ready to start. Another aspect that we think is that may slow things down a bit is getting the brokers up to speed. And I think Andrew mentioned it earlier on, that investor protection is all about investor protection and making life easier for investors. either in terms of instrument, in terms of risk management. But that depends a lot on the community, which is why we're having this kind of session. So again, this is all gearing towards building an industry, not only building the technology, not only building the instruments, but also building the players and the operators as well. So this again will take another couple of months, and then we're set to run.
Okay,
If I may add, and not to steal your thunder in any way, Damola, but I did hear Andrew touch on some things to do with the importance of the brokers and their need, and they being the custodians of investor protection, and also the level of risk management that may be required. I don't know whether we could ask him to touch on that a bit more. And I would add to that or join to that. So what's Andrew's impression or advice on how best to get this information that will build a robust operator base in any jurisdiction?
All right, so that's a great question for Andrew then. And then I'd like to add to that, I need to hear your thoughts on how the SDX is performing. Why I did see a research that spoke about the issuing a dual bond. I'm still going to get to the SEC to see how possible that is to issue both a digital and a traditional bond. And why was a digital bond more successful than a traditional bond? So I'd like to hear your perspective on that as well. Thank you.
So I saw a question just pop up as well about the use of custodians. So, and I think it goes to the heart of, in many respects, the point that Bola's made. You know, there are very few environments. I can think of a couple. Certainly, Finland was one. Portugal moved away from it, but there are very few environments these days that still manage final end beneficial owner structures. They are super complicated. To give everybody an accountant to CSD is a crazy environment to end up with, and stifles growth. And so why do you need brokers and why do you need custodians? I'm not even going to get into the derivatives landscape, although I might touch on it very briefly. But you need that custodial account system because, quite honestly, those banks and sub-custodians are better at managing those relationships in the different types of trading that we're likely to see across the landscape, whether it be high frequency, whether it be buy and hold. There's a lot of different types of trading, and various custodians and broker dealers are set up to accommodate that different style of trading. The exchange and CSD is simply not. They're not set up for that retail participation, and nor should they be. The last thing that the exchange and the CSD wants is to have Mrs. Smith or whoever it is ringing up and saying she can't find out where her trade's gone. Now that gets more complicated in the environment we're talking about. The question also that you raised, Damola, was about atomic settlement. You know, we're moving to an environment where we've got instant DVP. Flipping heck. I mean, most people can't even understand what crypto is, what trading is, let alone start telling them that instant DVP has taken place. You know, delivery versus payment that happens immediately. We're still in a landscape where you've got T+3 moving towards T+2 in some, you know, whether the US moves to T+1, they've got ambitions. You know, SDX has moved to instant settlement. I'm working on a CBDC at the moment that's talking about instant settlement. And that is a concept that is wholesale. It's not a retail concept that people should and need to worry themselves about. They need to be talking to their broker, to Hargreaves Lansdown, and want to see that the assets that they've bought have landed in their account. And that's a really important feature. You know, atomic settlement is a very tricky thing to consider. And when we've been talking about CBDCs, and this goes to the point I think Joseph was mentioning, which critically has to have the involvement of the central bank by its very nature. But of course, that then means that wholesale trading needs to be done with central bank money, and therefore the central bank should be involved. And therefore, when we get to things like atomic settlement and the central bank being involved, the central bank almost becomes an arbiter and an approver, a central entity that ensures that that atomic settlement can be trusted. And that is a very complicated environment. So why are brokers and custodians needed? Because as I've said before, we are not fundamentally changing our concepts of risk management and our concepts of investor protection and our concepts of competition. We're changing the technology in the asset class and the motivations around this, but we can't do that unless we get support from the regulators, and we can't do it unless we understand the path that we're going down. And whether we remove a CCP, that's a piece of infrastructure. The point is that the risk transfer mechanism still needs to be looked after in the same way to protect our investors. I hope that answers your question. I've written down many things here, but my point really, I suppose, is that we still need intermediation. We still need expertise of brokers and custodians, and we'll need, I think, for a long time to come.
Thank you so much, Andrew, for sharing your perspectives on that. So I think I'll just go straight, because you've mentioned an ecosystem. I don't know what NASD is doing to bring brokers up to speed, because clearly the market won't be a retail-facing market. So what is the NASD doing, and what are the plans to get brokers up to speed, and how can we get them set up to make sure that they're able to take advantage of this opportunity and the advancement of the SEC rulebooks that has been issued?
Okay, so from the broker side, it will be by socialization. As I said, we've done the first trial. We did a pilot run, and the pilot run essentially was to test even the acceptability, applicability, and the ease of use of the system that we were putting in place, and also to be able to tweak it such that it becomes, it is localized even to our environment. After we did that and we're comfortable with it, with the design we have, we will then start registering brokers to actually come in and do practice sessions. Now, a large part of the system we have in place has got, should I say, practice modules where you can go in and practice an issuance, you can practice a trade, you can practice a settlement, everything from uploading your clients onto trading, pricing, and so on. So the whole system is up and running and in place. Shortly, we'll bring it in the next batch, and then we'll just continue having those familiarization tours and practice runs, pending the time the real market does open. And there will be a cutoff date when we start. And when we do, then it'll be a live environment. So right now we have, should I say, a practice environment that would eventually be swept clean, and we'll come up with a live environment where all operators, not only the brokers, but also even issuers and advisors, because there's room for advisors to come in and play on it as well. The advisors can come in and also test their knowledge on it before the market then takes off. So by the time we're opening, we would have some knowledgeable players in the market.
Oh, excellent. So there's an e-learning management portal that the NASD has set up for this. So I'm sure the brokers should look out for emails concerning this, and then they can take training modules that would help bring them up to speed on what the market looks like. So I'll drive straight quickly to Ms. Janet. And there are two questions here that people, we have the audience, and please feel free to drop questions. That's the reason why we have the panel, to answer questions that you may be concerned with. So we have a question here talking about the need to have, is the SEC approval required for virtual assets? That's one question. And where an asset-backed investment is not traded on DLT, is that also going to be considered by the SEC as a virtual asset? So assuming it's an asset-backed investment or asset-backed token, but it's not being traded, is that going to be considered as a virtual asset or a digital asset? I know you've answered that before, but is it going to still be considered as a digital asset, even if it's not being traded? And then we talk about elements around the private market and the public markets. What are the NASD, the SEC thoughts on that as well? Then I have two more questions, then we can go to the next speaker.
Okay, yes, the digital assets, of course, they are all securities. Yes, whether they are traded or not traded. The tokenized asset is securities, and you're inviting people to like become part owners of an asset. So of course it falls under the SEC regulatory purview as the security. So it will be regulated, it will be registered, recognized as a security. And then if you're carrying out the activities of trading it, it will also be recognized. There are some people that do use other platforms apart from DLT to tokenize, to issue asset-backed securities. So of course, yeah, it will be regulated. It will be considered as a digital asset. And then the private markets. Sorry, I didn't get the question on that. I think you're muted. I can't hear you.
My apologies. Some markets operate both private and public markets. So to what extent would SEC be involved in the kind of securities issued in the private and in the public markets?
That basically would depend on I've said earlier that SEC focus is on the activity of what you're doing. So it will depend on either of the market, what is the activity that is doing? Is it an investment activity that will fall under the SEC regulatory purview? So that's what we will look at. So it will actually depend on the activity that those markets are involved in.
Okay. I know you did mention under the SEC rules, you talked about the exemption of crowdfunding platforms. So your thoughts on the possibility of if tokens were issued and distributed through crowdfunding platforms, that would still be required to be regulated by SEC, if I'm correct?
Yes. Yes, if it's issued through crowdfunding platform, of course, but you know that in the crowdfunding scheme, there's no trading of the securities. If you need to trade, you need to comply with the public company requirements of listing of your securities. So in the crowdfunding scheme, there's no trading. You can only issue and then have people subscribe to your tokens. Yeah.
Okay, so on the issuance side, they still need to come back to the SEC, but on the trading side, they can, that will not happen because they're not licensed to do that.
You have to comply with the law for any company that is more than 50, you're a public company. So you need to comply with the public company regulation coming to file, and then you list your securities to trade in the recognized exchanges.
Beautiful, wonderful. I must commend the work the SEC is doing. The SEC is one of the few regulators around the world that is ahead of the curve here. So it's very commendable for the work that you do, and we must express our appreciation for that. Lastly, before I let you go, Ms. Janet, what are you doing with the CBN to address some of the concerns that Mr. Joseph has raised, and same with Andrew and Mr. Ajumale? That's the big elephant in the room. So how do we bring the elephant home?
Well, what I can say about that right for now is that there's high-level engagement going on. It's ongoing. We've been engaging even while we were crafting the regulation. We were working together, and that engagement is ongoing. The discussion is ongoing at the highest level. So that's all I can say for now.
Okay, thank you so much. Without letting the cat out of the bag, a big thank you to Ms. Janet, Head of FinTech and Innovation at the SEC. Thank you for sharing your thoughts. So I'll move straight right to Joseph. We're still going to ask a few things from your end, but I'll go straight right there to Mr. Joseph. If we had the opportunity to amend the ISA Act today to expand the robustness of our markets, what areas do you think we should touch on?
I think I mentioned earlier the definition of securities need to be made clear as to classifying virtual asset, digital asset as clearly defined as part of the securities, and also there has to make clear provisions that relates to the current SEC rules are fine. I think I think because the way the ISA is currently drafted, it gives the SEC wide powers in relation to issuing regulations to, in some cases, even disapplying the provisions of the ISA. SEC has that power under the relevant sections of the ISA. So other than recognizing virtual assets, digital assets, tokens as part of security defined term, I don't think there is really any hindrance in the current ISA that will impact trading offering of digital assets. I think the ISA is sufficient to cover that. So after now, I don't think of any key provision that need to be amended other than defining securities to include virtual assets.
Thank you so much. So parting comments, I'd like to take each of the panelists to just give us their thoughts. Andrew, I'll start with you. And then we're talking about the elements of risk. People think about, look at what happened in the cryptocurrency space, where Bitcoin lost almost 60–70% of its value in 1 week, and everybody just goes hands off. So the element of risk here, I'd like to hear your perspective on what are the key risks do you see with operating a market like this, and how do you think your best thoughts on the mitigants that can be applied, given your experience with the SDX and other exchanges that you're working with? Thank you.
Yeah, I think that's a very good question. I think I'd put it simply, actually, Damola, that we, over my 20 odd years of working in the market, innovation has come and continued. And, whether it's HFT, high frequency trading, whether it's algorithmic trading, it doesn't really matter. The only way that we mitigate risk is by working together. We mitigate risk by obviously pushing the boundaries. We're all going to push the envelope of regulation. I'm sorry, Janet, that's just what we do as market participants. But I'm heartened by what I've heard from the SEC today. I think, as to complement the points that you made, Damola, I think the SEC is well ahead of the game in some respects. And the other way that we mitigate risk is by not just simply doing something because we think it should be done. And what I mean by that is that just because there's technology there doesn't mean we need to use it for everything that we can possibly think of. Right now we're looking at solutions in all of the areas I talked about, whether that be virtual assets, digital assets, central bank digital currencies, whether it's in wholesale and retail. But the one thing that is certain, at the moment, we're predominantly focusing on cash-like assets, those that can fulfill those points I've just made about atomic DVP. Right now, what we shouldn't be doing is rushing headlong into thinking about, say, derivatives. That at the moment, the use case is unproven. And I talked to the participants in the UK and around Europe, extensively. And the one thing I'm hearing right now around, especially OTC, but also listed derivatives, is be very careful. Listed derivatives are a world where time is important. It's a feature of a derivative, and trying to get rid of time actually will be damaging to the world of hedging. So there are places for digital assets and tokenization in maybe the collateral transfer and so on. But we just got to think carefully about how we use technology rather than just simply thinking that it can solve all our problems. And by working together in ways like this, I really believe we can. So I'd just like to thank you, Damola and Bola and the NASD and the SEC for allowing me to speak and for demonstrating truly that we are collaborating. Thank you.
Thank you so much, Andrew, for those parting comments. Really most grateful for that. So I'll just jump straight to Ms. Janet and then Mr. Joseph, and I'll take Mr. Ajumale right after that. So I'll take Ms. Janet on the part of her thoughts on how soon do you think the first digital asset will be issued in this market without letting the cat out of the bag, So we're hoping to get some excitement going on in that space because it's the youthful population being targeted here. And the SEC must be commended for coming up with these initiatives. Otherwise, you would find a lot more of them drifting towards more crowdfunding platforms that where it's currently being regulated as well. But before then, it could be a zero-sum game, if not because the SEC was able to step in. So how soon do you think we can start seeing digital assets being traded in this market? Because you did mention it's important for fintech companies to come into collaboration with exchanges. This is exactly what TK Tech and NASD is doing to see how we can enhance markets. But Andrew also mentioned just now that just because we're talking technology doesn't mean it can be used for everything, including red lines like the derivatives and ETFs, like we call it. So, but those are two questions in one. When do you think the first digital asset will be issued in this market? And when do you think we can start seeing some of these assets become options for investments? And your thoughts on the boundaries around risk and the elements of derivatives, applying some of these things to some markets that may not necessarily apply here.
Okay, on how soon we'll start seeing, I think it will be sooner than we expect, because we're already engaging with the community, and particularly we've been engaging with the community on issuance and a lot of fintechs on it. So I think it will be sooner than we think, because framework is already out, and then we're making provision to operationalize the rules. And then right now we're working on guidance to provide the market with the guidance to explain the gray areas that we've been receiving comments. A lot of comments have been coming in. So on the operationalization and the process to begin, it's going to be very soon. Yeah.
Okay, so the SEC is saying be on the lookout. Some interesting things are coming to the market, and they are very ready to make sure that there's good regulation to protect investor interest. Any parting comments from you, Madam, before we move to the next speaker?
Yeah, we encourage more collaboration in the market, and we encourage that our doors are always open. So if there's any inquiries or anything that you need to know about the SEC regulation, you can contact the SEC at any time. And then we're working in close collaboration with all the stakeholders to ensure that we have a smooth run at this new terrain. You know, the fintech innovation and everything, it's all new to everyone. We're all learning in the process. So we encourage more collaboration in this space. Thank you.
Thank you so much for that. So the SEC is calling for more collaboration between players in the market, and it's very commendable that they've also brought in fintech as a critical stakeholder to advance the market's interest. Thank you so much, Madam. Ms. Janet, Head of Fintech and Innovation at the SEC. We appreciate the good work that you do, and please keep the good work up, and we will continue to support in any way we can. So straight to Mr. Joseph, your final thoughts on this, and what are the legal perspectives that you think we need to watch out for? White paper, legal opinion, what do you think?
Thank you, Demola. I think it's heartwarming to hear the various confirmations that have been provided by Janet on behalf of SEC, which will clarify some of the points which we have in relation to the rules. As I mentioned earlier, the rules are progressive, a stepping stone in the right direction, and we hope that things will improve on that. And she did mention that about issuing clarification or guidance in relation to the application of the rules. One of the areas which we want SEC to also clarify, which I have not mentioned earlier, is in relation to the value at the virtual asset service providers regulations. If you look at the regulation currently, the way it's drafted, a VASP can provide the services of a DAC and of a DAS. Then the question that some clients have asked us is, if we have a VSP license from the SEC, can we carry out a DAC business and also a DAS business without needing a separate license for those categories? And the rules is currently not clear on that, and that is an area that needs to be clarified. I think various awareness are taking place. It's good that the NASD has organized this, and we continue to have subsequent events where issues will be addressed, and it's also heartwarming to hear Janet mention that the SEC is engaging with the central bank, which is key. That leg needs to be closed out, and because without that leg closing out, Janet mentioned that they hope to have an issuing soon, but without this issue being resolved, that with the central bank, that is going to be a tough one. Also to thank the NASD, thank you, thank Bola, Demola, and everyone at the NASD for organizing this, deeply appreciated. And then we hope that this engagement continues and that the market gets better for it. Thank you.
Damola, you're muted.
Oh, sorry about that. So I said, so I don't act as an unfair arbiter in this case. I don't want to, I'm not extending my overreaching powers as a moderator, but let me ask if Ms. Janet would like to respond to some of the questions that Mr. Joseph had just mentioned in his final comments. Then I would take Mr. Jumale and then I would hand over back to the NASD team so that we can wrap this webinar up. His thoughts on, if I get a VASP license, can I do DS? If I get a DS license, can I carry out virtual assets trades?
The thing is, the VASPs, the virtual asset service providers, I said that it's anonymous in which encompasses all other service providers. The digital asset exchange, the digital asset offering platform operator, they're all under virtual asset service providers. There is no separate regulation for virtual asset service provider. So as a virtual asset service provider, you can either be registered as a digital asset offering platform, a digital asset custodian, or you register a digital asset exchange. And then the issuance platform. So those are the 4 things that will be registered under as a virtual asset service provider. So there is no separate regulation for virtual asset service providers. Everything is under, they're all regarded as virtual asset service provider.
Thank you
Thank you.
so much.
Yeah, Demola, sorry, I need to break the rule. Apologies, I'm breaking the rule. That is not in my character. Thank you, Janet. I think that is very good to hear. But if you look at part 4 of the rules currently, you'll see that the way it is drafted, it recognizes a separate license as a VASP service provider. So I think that needs to be made clear that
those are the areas that I said will provide clarity on. Because if you look at the regulation, you see that others are additional requirements, but the general requirement is for virtual asset service providers, and then for the other areas or requirements, there are additional requirements to the main general requirements. So those are the things that will provide them clarification on.
Okay, thank you.
Yes,
Okay.
Thank you, sir.
I think just before I let Ms. Janet go, sorry for always bringing you back. It's not every day we get the privilege to have the regulators sitting in the same room with us, but we're most grateful. So if I may ask, the digital asset exchange license and the digital asset offering platform, they appear to me as one and the same, although you've drawn a bit of a clear distinction between them. So can either of them do same? Because, for example, if you are issuing a public offering, you can do that on an exchange, and likewise, you can also do a listing by introduction. So in this case, how does this apply?
Digital assets offering platform. Don't forget that the issuer is different from the platform operator.
Yes.
So if somebody is issuing a digital asset, you're going to a digital asset platform operator to issue your digital asset. And if after issuing the digital asset, you intend to trade, you can go to a digital asset exchange to trade your digital assets. So those are the clear distinction. So there are 2 separate licenses. Okay.
So if they were to carry out something in the traditional market we call listing by introduction, or they were to issue an STO on a digital asset exchange, so they don't have to go through the process of the issuance. They can do both on a digital asset exchange, or they still have to go through the protocol of the asset operator first before the exchange.
I didn't get that your explanation. Sorry.
Okay.
That is already issued and digital assets.
So no, freshly issued. So if, for example, we're doing an ICO, For example, can an ICO be done on a digital asset exchange, or it has to go through a digital asset platform before going to an exchange?
No, you have to issue it first on a digital assets platform. You have to issue it first before you can trade it.
Okay, all right. Thanks for that clarification. All right, so so that we don't bother Ms. Janet with all the questions in one day, there's still quite a lot that we have to engage with, and it's really a pleasure. Thank you so much for taking the hard job of coming to interface with the markets and giving us your perspectives on how these things can be better done. So I'll jump right straight to Mr. Jumale and your final thoughts on that. And given what Ms. Janet and Mr. Joseph has said, when do you think we can make this happen?
Okay, so before I go into the when it's happening, I must appreciate the amount of learning that I have been through today, starting from some of the things Andrew said about how even in the US markets, you've got 5 different regulators looking at this whole space in 5 different ways. And the White House getting involved to say, guys, harmonize. So, you know, it just shows the volume, the complexity of dealing with this new space. You can either simplify it or you can amplify the complexities of it. And I think what SEC has tried to do is, not even tried, what SEC has achieved is that they have identified the space that they are going to cover, and everything else is outside that space. And it has given NESD, for example, the framework within which to build a market. The aspect of interaction with CBN will remain. But again, as I said earlier on, we, together with SEC, can form, once we can properly define that this is a security. It may be on an advanced technology, but it's still a security. It's still an investment instrument. I think the CBN will come around to it, and we will probably continue to work with the SEC and other stakeholders to draw a much thicker line between a Bitcoin as it is and an investment instrument such as what we are intending to trade. In terms of the when, a lot will depend on the level of uptake from operators. A lot would depend on the level of readiness of the issuers to come into the markets. A lot will depend on, again, SEC providing a sign-off, and I'm not putting Ms. Janet on the line here, but it depends on how quickly we get a sign-off from the SEC to open, and then we can open. So I would say anything between a month and 2 months, we should be up and running.
All right, so thank you so much, Mr. Jumale, for giving us your thoughts. We've come to the end of this very interesting series. I can assure you that we have more of this to come, and hopefully we can even have a physical version of this Enlightenment series in the nearest future. The comments are pouring in, and the audience have found this very insightful and interesting, and they have seen this as a learning opportunity to get them involved in the next phase of market development. A popular saying by Bob Greenfield, the former chairman of SEC in the US, did mention that in today's market, all tokens and securities can be tokenized. And he says in 5 years, all tokens and securities will be tokenized. So therefore, it's an inevitable change that must happen. And therefore, it's important that we get ourselves prepared for the next phase of market transformation. So on that note, I'd like to thank everyone for participating at today's session. And I want to encourage you to please look out for the next series, Enlightenment series, that will be coming up by the NESD with respect to digital securities and its impact on the market and the investment opportunities that comes with this alternative asset class. I'd like to say a big thank you to all our panelists again. I'd like to take in no particular order. I'd like to take Ms. Janet. Thank you for your time. Ms. Janet is the head of FinTech and Innovation. Thank you for the hard work you do in the SEC and for even giving the market room to operate. We are really most grateful for that. I'd like to thank Mr. Joseph as well for his legal perspective and insight on making sure that we get first-hand knowledge of the legal requirements of the law, and also Mr. Andrew Simpson, who was quite helpful speaking about other markets, and Mr. Jomale. I'd like to hand over to Mr. Lunge, who's the CEO of the NASD, to help us draw this curtain and put his thoughts on other things to expect in terms of announcements and his closing remarks as well. Thank you so much.
Yeah, thank you. Thank you, Damola. Thank you for being a fantastic host as usual. Lots of material to digest. And really, I mean, we proceed into uncharted territory. And when you proceed into uncharted territory, you proceed gradually. And we expect that the uptake will also be gradual. But what is inevitable is what you said. I mean, just like the internet has become a household item, so will digital securities become a household item. I think we're beginning to distill the fine areas of what it is we will be dealing with, you know, and what is encouraging is that the market is actually ready for this. You know, there's an anticipation, and that anticipation will create a vacuum that we should quickly fill. We thank the regulator for being very proactive about this, and we are very much well positioned to assume that space. And we are happy that we have all the collaborators around the table, and the support we've got from the regulator, we ask that it be greater enhanced, and we are positioned and ready to go. We will cross the hurdles that we have seen, particularly that of the CBN. I don't think that should be too much of a problem, and we should be ready to go as soon as all of this, as soon as we do get further clarity from the umpire. We stand ready to serve the market as we've always done from an innovative perspective, and we expect that this will come to be something when we look back in the next, I'd say, 3 years. It was a path that we have trod very well. Thank you.
Thank you so much, sir, for that. You've heard it from the CEO of the NASD Securities and Exchange Market, OTC, Mr. Egwadi Lunge. Thank you so much for putting your perspectives and thoughts on this. We do know you have questions that we may not have answered. Please continuously feel free to drop your questions into the question box, and you can also send an email directly to the NASD team to address some of the concerns or questions that may not have been addressed on this call. So I'd like to say a very big thank you to everyone for participating in our market series, market enlightenment series. And we want to encourage you to please look out for the next one that we'll be holding very soon. And I'm sure before the end of the year, there should be a physical meeting or engagement that helps us to put some of these things in perspective. Thank you so much again for your time. My name is Damola Akinlure, the MD of TK Tech Africa. And I'd like to thank you all for giving us 2 hours of your precious time on the Wednesday morning. Have a nice day, and we wish you all a great week ahead.
Very much.
Everyone.
Thank you. Do have a good day too.
Thank you.
Thank you.
Bye, everyone.
Bye.
Bye. Thank you very much.